Well, the recent rally in equities has the Dow on track for the best quarterly percent move since the third quarter of '09, when it rose almost 15%. Pretty good quarter, actually. Our next guest says to expect more upside in the near term. He says fears of a significant and sustainable equity market decline associated with the, quote, double-dip recession remain misplaced. Tony Dwyer is with me, Managing Director and Chief Equity Strategist at Collins Stewart. Mark Lamkin is Chief Investment Strategist and CEO at Lamkin Wealth Management. Good to have you on the program. Gentlemen, good to see you. Mark, let me kick this off with you. How are you allocating capital these days?
You know, Maria, I want to be in sectors that that when the European recession, it doesn't have a huge impact and that will benefit from U.S. consumer and corporate spending. I like Dow Jones U.S. Technology Index right now. LPL Financial just put out a report that talked about corporate spending up 17%, most of that in technology. So I like technology. I also like U.S. consumer spending, Dow Jones consumer staples right now. And I think you're going to see, obviously, a great Black Friday. You're going to see that consumers continue to spend money. Best December in years. I think we benefit from there as well.
So let me turn that same question to you, Tony. I mean, does it bother you? Does it worry you that here we have more headlines out of Europe and we could actually see these countries on credit watch negative? Is that going to impact the EFSF and the ability to pay lending costs?
It could, Maria, but then again, it didn't affect us when we got downgraded. I think the most important thing that we have to remember is that the driver of economic activity over the last 3 to 6 months has not been Europe. It's not been a slowdown in China. It's been a drop in interest rates in the U.S. If our economy was based on the slowdown in Europe, we would already be in trouble. Instead, we're reaccelerating. So as long as Canada and Mexico don't go into recession and interest rates stay low in the U.S., it's a very stimulative backdrop that you typically want to buy the cyclical sectors with.
So cyclical sectors, you're buying the economically sensitive names. How do you invest then in that environment?
We found that when the 10-week rate of change on the 10-year note yield dropped as rapidly as it did over the course of back earlier in the fall, you wanted to buy, historically, you wanted to buy the information technology, consumer discretionary, also the industrial, financial, material sectors. They outperform just about in each case.
Mark, you say that the highlight risks from Europe are beginning to fade. Where do you see that happening mostly, and are there value stories to be had in Europe right now?
You know, I don't want to invest directly in Europe, but I do think the market believes that this package is going to be put together. The details are sketchy, and that's why you saw the market off from 167 points today down to about 25. Everybody believes this deal is going to happen, and when it does, it gets back to U.S. fundamentals. And that's why I think we finish the year strong and probably 8 to 10%, probably about that 1370 next year based on improving U.S. fundamentals and the package finally getting put together in Europe, Maria.
Well, fundamentals, you know, I mean, from my standpoint, feel like they're mixed. So are you talking about strong fundamentals economically in the U.S.?
I'm talking about corporate earnings specifically.
Okay.
I think S&P 500 record earnings, even with the lowered expectations with the European recession, we're talking about $106, $107 earnings. That's about a 9-10% increase. That still puts us at a PE ratio below 12 on the forward year, and I like those valuations.
Yeah, no doubt about it. Corporate sector's still strong, which is, of course, a real positive. Gentlemen, thank you very much. We'll be watching and hope to have you back soon to talk more about investing in this mixed environment. Let's take a look at some of the other business.